Hello and welcome to another episode of Pakistotomy. My name is Uzair, and we're resuming normal service in English in terms of covering different topics. And I apologize for a bit of a scratchy voice that I may have. I'm recovering from a bit of a cold. It's not COVID, thankfully. Today, we're going to be looking at global energy markets and get an expert view on where things are, where they're going, and how a country like Pakistan, which is an energy importer, ought to think about long-term energy security. So to talk about this, I have the honor of having with me Randy Bell. He's the Senior Director of the Atlantic Council's Global Energy Center. He also oversees the center's annual Atlantic Council Global Energy Forum in Abu Dhabi, which is just coming up after a delay due to the Omicron wave. So that event is on track. And he also serves as co-director of the Council's Task Force on U.S. Nuclear Energy Leadership, and is a Richard Morningstar Chair for Global Energy Security. So Randy is someone who understands global energy markets, has his eye on the ball, so to speak, in terms of where things are going. And so, Randy, we're excited to have you here today to share with us what's going on in global energy markets and what the outlook is for both the near and the long term.
It's absolutely a pleasure to be here. It's really looking forward to this conversation.
I want to
Thanks so much
start
for
with
inviting me.
Yeah, thanks for joining. And I want to start with sort of where things are. We started the pandemic. Oil went in the negative for a hot second. It was really cheap. There was debate in countries like Pakistan that buy everything that you can and store it because it's cheap and cheaper than it's ever been. And then since then, there's been volatility in the markets. Oil is hovering around $90 per barrel right now. And really, it's creating external sector stability risks for a country like Pakistan, which we'll get to in a bit. But first, help us understand what's really going on in the energy markets, particularly in oil and natural gas.
Right. So what we've seen over the past year or so is just increasing prices due to the recovery following the collapse of prices in March and April of 2020, really during the peak of the global lockdown. And as you mentioned, oil in the U.S. went negative very briefly, which had never been seen before, and prices were really, really low levels. And that frankly was for energy importing countries a very good stimulus, allowed perhaps balancing out some of the negatives that you saw because of lockdown. Of course, for the exporting countries, a less good situation. So we've seen, as the economy has recovered and all the charts show, continued employment, et cetera, increasing demand. Now, there are a lot of reasons why prices are higher now than they were before COVID, even though demand isn't quite as high, or with natural gas, it may be about as high. And those reasons, there's disagreement about what those reasons are, but I think a couple that are worth considering. The first and foremost, supply is always slower to follow changes in demand. And so demand can change very quickly, as we saw in 2020, where demand just dropped off a cliff, within days, and supply, it took a long time for the supply to be reduced, and so that's why prices went negative. And on the flip side, we've seen demand come back fairly quickly, not quite at the same level as it dropped, but still relatively quickly. And supply has a hard time keeping up. So even as OPEC plus continues to put more barrels of oil on the market, the producers themselves, they have a 400,000 barrel per day increase that happens regularly. That's sort of part of their cap. The producers themselves aren't able to keep up with that increase. And so you're seeing producers have a hard time coming back online. Now, there are other things that are driving the current situation as well. Geopolitics, particularly in Europe, which is distorting the natural gas market. So Russia provides a lot of the natural gas in Europe. They are meeting all their contractual obligations, but they're not providing additional volumes. to Europe when they normally would have, and when they do have those volumes available. And Fatih Birol, the head of the IEA, has been very outspoken about this, that Russia is distorting the market and denying gas to Europe. At a time during the winter when it needs more gas, when it actually didn't have as much much in storage as it needed to going into the winter, because there was an unusual summer where the wind didn't blow as much as was expected. And so the wind turbines that were expecting to provide power in August did not provide enough power. And so you needed to rely on natural gas that was in storage that they usually use over the winter. So you have these dynamics all playing out all at once. And then you just have a general commodity boom, where it's not just oil and gas, but any sort of molecule, copper, for instance. There's just demand like we've not seen before. And with supply chain bottlenecks, et cetera, you're seeing just struggles getting these commodities to market. So you see really very, very high prices. Again, as you said, oil above 90, natural gas, particularly in Europe, but in other parts of the world as well, at highs that they've really not seen before. And that's going to cause significant problems for a place like Pakistan that is an importer of commodities.
Yeah, I think there was a period of time earlier this winter or late last year, basically, where cargoes for gas weren't being delivered, right? And they were basically turning around midway to go to Europe because they were bidding up the prices. And it was just crazy for a market like Pakistan, because it was like, okay, damned if you do, damned if you don't, because you were in a catch-22 where you had to buy expensive gas. But even if you did that, it still wouldn't come to your shore. And there was a lot of political pressure, and that created some political instability or criticism for the government at that time. One thing I was reading, Randy, before starting this podcast with you, was the role of the United States around shale oil. And it was an interesting story, and I would love your thoughts on this, was that as prices go up, typically in the recent past, US shale producers have stepped in and sort of expanded their production to sort of beat back prices. It hasn't happened yet. And one of the articles I was reading said, well, ESG, environment, social governance standards, have made it difficult for oil producers to get access to the financing that they need to be able to then invest in supply, et cetera, and that there has been supply destruction. How much of a role have things domestically in the US played in terms of the global oil price boom, in terms of prices remaining high on the sticky, being sticky on the higher end, and US shale producers not stepping in to fill that additional demand?
Yeah. So it's definitely true that shale is not producing at the same level as it was before COVID. However, I do take issue with the argument that it's ESG that's causing that. There's a world in the future where ESG can limit investment. But frankly, the limit in investment in oil and gas production right now is because oil and gas has been a terrible investment since 2014 or so. U.S. oil and gas, it's underperformed the market, and U.S. oil and gas producers have been sort of burning through cash, and in many ways have been seen by investors as being deeply irresponsible about the cash. So they're taking this opportunity to show financial discipline, and to show that they will be able to pay off debt, that they will not just throw money at continued production without actually paying off some of their debts, paying investors, making a return. So that is really the driver of what's happening right now. Now you do see shale oil and gas starting to come back. It is increasing. It's happening slower than might have happened in the past, but it is happening. And the recent projections will be that probably not this year, but by next year, U.S. will be producing more oil than it had been pre-COVID. So they do think that the shale patch will come back. It's just taking longer than perhaps it had in the past, simply because they do need to show this discipline.
Thanks for clarifying that. I think it was something that stood out to me as well. ESG can't have this big of an impact in the short term. Like it was a bit odd to me that that was the argument being made. So appreciate you clarifying that. One other thing that I was reading, and I would love your thoughts on where the global markets are, is that these prices are going to be on the higher end for the foreseeable future. Now, I don't want to give a prediction in terms of 8 months, 10 months, 12 months, but generally speaking, analysts have been saying they're going to remain high. And one of the arguments they're making also is that, as you said, inventories have been drawn down. And so as those inventories go up, the demand is already strong. And so it will take a while for everything to sort of settle down in turn, which then leads oil to come down in its prices. Where do you see this price action going? And I ask this because it's an important debate point in Pakistan, because the central bank is arguing inflation is transitory, pretty much like the Fed here, and that oil prices, which have been the big driver of external sector instability, that they will ease. And once they ease, everything else will be fine. And the government on the fiscal side is also betting on that by not passing through the price action to the consumer, playing with petroleum taxes and sales taxes to absorb sort of the pain that otherwise would go to citizens. Again, hoping and praying that in the next 3-4 months, oil comes back down to 60, 70, $50 a barrel, and they'll be out of this situation. Where are things going, and how do you see the price action sort of going forward?
So there's no bigger risk than predicting the price of oil. You generally find, if you go back historically, that you see people predicting something and it happens for a while and then it switches, and it's very hard to know why that happened and predict when that will happen. So I'll say that absolutely that most analysts do see us in the middle of a super cycle, that we will be seeing high prices for a while, perhaps $80 as the floor, maybe not quite as high, though any, at this current moment, any geopolitical vibrations could cause prices to go above 100 if Russia were to invade Ukraine, for instance, if what we were seeing with the Houthi attacks in the UAE, if those were to become more serious, you could see prices in this sort of current moment jump up very quickly above 100. And there's other things that could drive that in the short term as well. Now, in the medium term, there are a number of things that could just as easily drive prices back down. Another wave of COVID. If there's another variant, though people are more and more tired of lockdowns, a serious wave could do that quickly. You also, I do think, we'll see shale coming back online. But also the question about Iran, and if Iranian barrels come back on the market in a serious way, and the conversations about the JCPOA, I think are crucial to watch in this, and could really put barrels back on the market relatively quickly, and that could be a big driver of oil price decline. So I think it's really that in the short term, yes, prices are going to remain high, but I would want to be cautious about calling $120 or $140 oil or something like that. There's just a lot of opportunity for the price to go down as well. It's not something that I don't have sophisticated oil price models at my disposal, but I do think that there are, there's a good chance that all those predictions are wrong. I wouldn't bet an entire economy that they're wrong, but it's also worth anticipating that they could be wrong.
And to sort of help us understand what's going on in the long term in energy markets, right? There's a lot of talk about renewable energy, debate around nuclear, whether it should be part of sustainable energy plans in the long term. There's also this debate. I remember reading a foreign affairs essay on this a couple of months ago about how demand destruction in the oil markets actually is going to lead to a whole lot more volatility, including higher prices as the marginal cost of producing oil in particular goes up. What's going on in the long-term sort of climate change oriented energy market debate? And where do you see things headed in, like, let's say, super long term? Again, not a prediction, but what are these trends that people need to be aware of?
Yeah. So what you see over the medium and long term is an increasing push on decarbonization, on climate action, on moving the energy system to net zero. There are a number of different ways of getting there, but the primary focus in a lot of the West is on renewable energy, with different and then other and then sort of subsectors of the West looking at nuclear, as you say, or fossil fuel with carbon capture, or other forms of clean power. And the other thing that I should emphasize is that the discussion is on electrification of many parts of the energy sector. So using more electrons and fewer molecules. So what does that mean for oil? There are many predictions about a peak in oil demand, and then a decline over time. And there are a number of different scenarios that, depending on what policy actions and what consumer actions and technology develops, what that oil demand will look like. The most aggressive, some of the most aggressive that I think still are realistic, are the IEA's net zero scenario and BP's net zero scenario. And both predict that oil demand will be 25 million barrels per day by 2050. And that's from about 100 million barrels a day right now. So significant decline in oil demand over the next 25 or so years. That's if the steps are taken to electrify transport, to move away from fossil fuels and oil being the main transportation fuel, power fuel. It's used less and less in the power sector, but nonetheless really pushing away from oil demand. Gas is a slightly different story because gas plays an important role in the power sector and is a lot cleaner than coal. So I think there's a more complicated future for gas, and I think a lot more disagreement about where gas goes. About what kind of role it has out to 2050. It surely will have a role balancing renewables. The intermittency of renewables is a challenge, particularly as you deploy more and more on a grid. And so it'll play, I think it will play some sort of a role out to 2050 in the power sector. And that's important to watch how other technologies manage intermittency in the power sector. If storage, long-term power storage technology develops, gas may have less of a role. If that technology does not move quickly, gas will probably have more of a role. I think nuclear is very, very important, and you will see ongoing discussions about that in Europe, in the United States, in much of the world, where nuclear is very energy dense. It doesn't use much land, which is really important. Renewables can use a lot of land, and so you can use nuclear power in many countries that don't have a lot of land or don't have a good renewable resource, and it is a firm, clean source of power and next generation technologies will probably allow nuclear to be in more countries than it is in right now. Easier to use, smaller projects, more cost-effective projects. So nuclear is really interesting. And then I think the thing that people talk a lot about is hydrogen. And hydrogen can be produced many ways and can have an important role in the power sector, playing the role of gas that gas does now, balancing renewables, working as a long-term store of power, or it can play a limited role in the transportation sector as well. So all of these trends are pointing towards a world which is more diverse in terms of its energy sources, cleaner in terms of its energy sources. I don't think we'll be getting rid of fossil fuels in our lifetimes, but they'll probably play less of a role going forward. The question really is not, I think at this point, not so much about what the changes will be, but more on the pace of that change.
From 100 million barrels a day to 25 million, like that's a huge amount of demand destruction, right? And so one, I wanted to get your sense of like, do you then subscribe to the view that fundamentally creates a lot more volatility in energy markets because, companies will go under, countries will try to figure out their strategy. A lot of things, technology will be hot one day, not so hot another in terms of confusion, in terms of potential baseload capacity, all that stuff. So do you subscribe to that view that we're in it basically, if these scenarios were to come true or anywhere near coming true, that there will be a lot more volatility that countries, especially importing countries, ought to be prepared for from a macroeconomic perspective.
Yeah. So there's no question. Well, no one ever said that just because oil demand is declining doesn't mean you don't still see commodity cycles. And so there's still the question of commodity cycles, but it could be amplified because it's hard to know what to invest in when demand is still declining. Though there will be, it's not going to be an even and predictable decline. And so it seems more likely that those who will be producing will be either short cycle plays, so shale oil, something that you can make your money back relatively quickly, or oil plays from NOCs, the national oil companies that can finance a lot of this on their balance sheets and not and so it can manage some of that volatility where financial firms, banks may be a little more wary of making investment in long-term oil and gas because they don't know what the future demand picture looks like. So I do think that yes, there's going to be volatility in oil and gas markets. There always has been. So it's something that countries need to be prepared for. But at the same time, the long-term trend will be lower prices. So maybe perhaps more volatility, but also ultimately lower prices because the demand will be so much lower. And as the prices will need to stay low because you will just higher prices will create more demand destruction. So it's a vicious cycle for some producers if they're not thoughtful about this. But ultimately great for importing countries if they can think through how to manage the volatility while recognizing prices are going down. And also there's a great opportunity for importing countries because new technologies tend to be less volatile. So renewable power, while intermittent, is relatively predictable in terms of the ability of its ability to produce power. So you sort of know what those costs are going to be and when it's going to produce. There's variations to that, as we saw in Europe this summer, but in the end, it's relatively predictable, and the marginal cost is next to zero. So.
Yeah, if I'm recalling my data correctly, like because of the issues in Europe this summer, I think they burned a lot more carbon than they would have otherwise, right? Because the renewable was out of the picture for a particular period of time, and you had to crank up coal power plants and old dirty power plants that otherwise would not have been used for the baseload capacity. You mentioned national oil companies, sovereign countries being able to put things on their balance sheet. And there have been rumors recently over the last few days that Aramco might be getting back into the equities market and sort of diluting or selling some more shares, taking advantage of the higher prices right now. What are you seeing in terms of the big oil producers and their strategies as they, ramp up preparation for a future world where demand destruction is going to happen? Saudi Arabia, UAE, etc., Russia even. What are they beginning to do or invest their dollars in to sort of, plan for this new future?
Right. So Saudi Arabia and UAE are very good examples of a thoughtful approach to being an oil producer and in an energy transition. Russia is more complicated, so I'll get to that in a little bit. But UAE in particular, but Saudi is pushing very, very quickly as well. They're both actually low cost and low carbon producers. So they see themselves as the place where oil will be produced when it is not produced anywhere else, because it's the lowest price and it is the lowest carbon per barrel. And so in a world in which there's 25 million barrels of oil demand today, you could imagine a large chunk of that coming from Saudi Arabia and the UAE. So they have a long-term market. And so they are preparing for that. The price will be lower, but they will still be selling and they'll still be profitable. What are they doing? they are also investing in the technology of the future. UAE has been doing this for over a decade with Masdar, the clean energy company. So serious solar investments around the world, some of the lowest tariffs in the world in the UAE and Saudi. They're doing these incredible projects. So they're investing a whole lot in future technologies. Now they're moving into hydrogen. The UAE has done a lot on nuclear. They've had a nuclear power plant come online. 2 of the reactors are online now. There are 4. So they're doing a whole lot on technologies of the future. Saudi is doing the same. They're not quite as far along, but they're moving very, very quickly. And they have some great opportunities, again, with hydrogen, producing both green hydrogen from renewable power and so-called blue hydrogen from natural gas with carbon capture. And so they can export that. And so they're creating the market for future energy as well. And so there will very likely be energy powerhouses going forward. Just it will be a more diversified set of energy resources that they can export. And so I think that's really interesting for Saudi and the UAE. Now, Russia, they are a lower cost producer, not as low cost as Saudi and the UAE. Their carbon intensity is not great because they have very leaky methane issues across their gas infrastructure, but also from their oil production. And so that's something that they would need to address. However, they are in the scheme of things, they will still probably be producing. They're starting to pay lip service to the energy transition. They're not doing much in terms of investing in technologies of the future, but there's again, before there's action, there's always talk. So let's see if that talk turns into action on some of the clean energy technologies. They possibly could do that. But they're I think less well positioned for the energy transition, but it's not as bad as some other countries where a decline in oil demand, global decline in oil demand could be deeply destabilizing and cause governments to fall, regional conflict, etc.
One thing that I mean, maybe I'm putting you on the spot here, but just came to my mind is sort of this obsession in Mexico under AMLO to sort of, rekindle Pemex as the big sort of national giant, that the treasure and sort of the all important entity that's there. He remains obsessed with sort of bringing that Pemex back into the global fold as a big major player. Would you place Mexico in terms of one of those countries that perhaps are not making the right choices moving forward and preparing for this, or is it a bit more complicated in terms of where Mexico is?
Well, John Kerry is in Mexico right now, making the case that they're making bad choices. That's more on the electricity markets, but where they're trying to keep keep renewable power out and focus on domestic fossil generation. But in general, yes, the situation in Mexico is not great. There's been a lot of international investment that is at risk, and it's not seen as a good place to do business right now by many of the companies. And I think that ultimately a country like Mexico really does need to have international engagement in order to manage its resources well in the short term, at the very least. Though that capacity can always be built back up, it doesn't have it right now.
Yeah, I think it's interesting. I've been sort of loosely following sort of Venezuela and Colombia, and you saw that transition where Venezuela sort of went down, in terms of its capabilities, and a lot of the talent and expertise went to Colombia. And Mexico is trying to play some of that type of game. And my fear, at least from a very outside perspective, not being an expert in the Latin American or Mexican markets, is that perhaps that's not the route that you want to go if you're Mexico either. You mentioned that the transition that's ongoing in the new technologies that are coming on board are an opportunity for energy importing countries. And I subscribe to that view as well, in the sense that, it's not only a transformational opportunity from a clean energy production point of view, but it's also a potential opportunity to leapfrog ahead, right? We're talking about microgrids and we're talking about battery technology and things like that, which in many places like South Asia, India, Pakistan, Bangladesh, the grid hasn't expanded to every nook and cranny of the country, right? And it's expensive to expand that grid, and there's losses and all sorts of issues. And perhaps the microgrid may solve a lot of those problems through renewable power. But from an overall strategic perspective, how would you advise policymakers in these energy importing countries that have had this history of, poorly regulated electricity and energy markets where the government still plays a big role, where these things can bring down governments if the price goes really high or basically lead to a loss in the next electoral cycle? How should they think about what's coming down the pipe and how to navigate a world in which there's going to be volatility on one end, but also significant opportunity on the other?
Mm. So, every country has its own set of issues and stakeholders that they need to manage. So, if you think about the coal sector in India, that's a very different situation than if you're sitting in Bangladesh or in Pakistan. So I think, but in broad strokes, I think the advance of renewable power and the relative how incredibly inexpensive renewable power can be, particularly solar, is a great opportunity for countries in South Asia to really develop a domestic supply of electricity. Now, Bangladesh is because it's very limited in terms of its land availability, a slightly different story. But there's a great opportunity in Pakistan for sure, and in India as well. In India, they're developing solar, they're developing wind. So lots of great opportunities. In Pakistan, I'm not a country expert here, so you're going to need to correct me if I'm wrong, but my sense is that the bigger challenge is just getting the investment in place to build that out. But once those frameworks are developed, it's a great opportunity because of the resource availability, because of frankly, the huge need for power in the country. Now, Bangladesh has some of the largest, I think it's the highest per capita rooftop solar in the world, which is a totally different approach, but also a fantastic opportunity there, and that could also work in certain parts of Pakistan and India as well. And then Pakistan also has any number of other opportunities to develop. Nuclear is something that's always been a part of Pakistan's energy system, and is an important piece of maintaining baseload. Of course, that's complicated, but is something that as we're moving forward, we need to be thinking about. And we really want to make sure that power continues to be developed in a clean way. The other thing that Pakistan could develop that I think is really interesting is hydrogen, as an alternative to natural gas, playing a role in its power system, playing a role for long-term storage. And that's something that I think there's a great opportunity as well that the country should be looking at.
Yeah, I think that the natural gas domestic production has been declining, and exploration hasn't really sort of, led to any new major discoveries. And that continues to be a problem because it's increased dependency on imported LNG. And because of the way the domestic market is structured, is that you continue to, they just recently started moving towards a weighted average cost of gas. But the IMF says that collectively in the electricity and natural gas markets combined, the debt in the system is over 6% of GDP, right? And the problem has been that clearing that debt out is not going to be effective so long as the underlying issues that caused that debt to explode in the first place are not resolved. And that then prevents investment from coming, or even when investment comes, it's linked to fixed ROEs and IRRs, and it's dollar denominated. And even the Chinese, who invested a lot, have faced some problems in terms of getting their money back that they're owed, and they've sort of tried to negotiate a settlement out of that, and that remains a problem. So I think that again links back to the unique, you mentioned unique political circumstances of different markets, right? That fundamental reforms have to happen in order to
Right.
then catalyze the investments. In terms of sort of the most exciting technologies that are on the horizon, you have mentioned, hydrogen, battery storage. We've talked a little bit about what excites you the most in terms of what's coming down the pipe, and where, maybe the technology is not there yet, but if we do have some sort of major innovation or some sort of ramp up in scale, that would fundamentally transform energy markets.
Yeah. I mean, if for a fundamental transformation of energy markets, fusion is always very exciting, but it's something that people have been talking about for decades, and it's always been a decade away, multiple decades away. There have been a number of breakthroughs over the past couple of years that suggest that it is possible, and so I really am keeping an eye on that as a technology that could be a game changer in terms of clean power, that just is entirely different than anything else we have. And if we're able to get commercially available fusion, as companies in the U.S. and Canada and the U.K. are claiming that we can, then that changes a lot. Now, the timeline for that is still a decade plus away for anything commercial, and so we have to be thinking about what we need to do now versus what happens in 2035 or 2040 or 2045. And so there are problems that we can solve now that are important to solve when we can. And so I think that's just sort of thinking, when you're thinking about technology, you need to be thinking about the timeline and what we can address with what we have right now. There's a lot that we can address right now. And so I think, even though I'm really excited about fusion, I'm really excited about hydrogen. I'm excited about a lot of the innovation that's going on in bio-based fuels for aviation, for instance. I still do want to get back to this key, the key opportunity in front of us, which is just basic renewable power, which 10 years ago was crazy talk that you could have the scale of renewable deployment that we're seeing year on year, and now it's the cheapest form of power available in much of the world, and so getting that, just continuing to push on that, I think you need to be thinking long term, but you need to be acting short term. There are real opportunities to continue to deploy renewable power, and battery storage is coming along as well. It's not long duration, but it really helps manage the grid over sort of a 4-hour time period, which makes renewables even more compelling case. So while I want to think about technology long term, I can't emphasize enough how important it is to deploy renewables as fast as we can right now.
Yeah, I think one of the in the long term strategies that Pakistan has, they're expecting 60% of electricity mix coming from renewables, but a big chunk of that is coming from hydro with mega dams,
Mm-hmm.
right? And one of the arguments there has been that mega dam projects can be delayed by years, if not decades, because there are construction delays all the time. So perhaps a hedge for Pakistan would be to do exactly what you're recommending, which is invest in small scale renewable projects, solar and wind in particular, solar in particular on the rooftop side, with populations that have not been connected or don't have consistent supply of power. And that, in my view at least, also helps solve some of the circular debt problem in the market, because it's rooftop solar. There is no grid that's being extended, and no distribution company that's trying to collect that money from people who, or businesses who perhaps may not want to pay that. So I think that perhaps is a strategy that they ought to look at from a policy level as well. I'm mindful of time, and I want to sort of conclude this sort of like conversation with you in terms of the risks that you're keeping an eye out on. You mentioned where things are with Russia and Ukraine. We have other sort of headwinds coming up in terms of, is there a new variant coming up that may lead to lockdowns and again a demand destruction that we saw in the early days of the pandemic. What are you particularly concerned about or keeping your eyes out on, let's say, 6 months from now?
Yeah. I mean, inflation, a huge question. So, I do think that some of it is transitory, as because the supply chain bottlenecks from COVID will ultimately shake themselves out. But some of it probably has to be dealt with through raising of interest rates and whatnot. That will change the energy market. It will slow down growth, could drop prices. And that's, depending on where you sit, that's a good or a bad thing. So inflation is definitely something to watch. And then I continue to watch the Middle East. And I continue to watch any sort of geopolitical issues, whether that's as you talked about Russia, Ukraine, but also China and Taiwan, also a major issue. So those I think are some of the biggest risks. And then we didn't talk about this, but cyber, which is a huge risk for the energy system, is often tied to broader geopolitical issues, but sometimes is just tied to criminal networks. And a major cyber attack on the Colonial Pipeline stopped the flow of gasoline on the east coast of the United States for a couple of days this year, and those types that was ultimately a relatively minor attack in the scheme of what's possible. So that's something that I'm paying a lot of attention to, and those risks only increase as the world gets more, the energy system gets more digitalized, whether that's the renewables, where you have to be connected through the internet to manage the variability or whatnot. So that's something that I'm paying a lot of attention to.
Those lines in the United States were quite something when the pipeline was shut down, and it sort of, rekindled again. I think in a weird way, they all sort of came together at the same time, where those long lines were there. We were beginning to see the early signs of inflation, which has continued to this day, and people are beginning to sort of point to the 70s once more as that era of high inflation and energy sort of being top of mind for everyone. And it's happening here in the US and in parts of the world like Pakistan. So again, Randy, thank you so much for taking out the time. This has been fascinating, and appreciate you joining us today. Before I let you go, would love your recommendations on books people should pick up and read. They can be about the global energy markets or innovation in the energy markets, or they can be on any other topic, that sort of books that you've enjoyed over time.
So first of all, I just need to point out, these are not my books behind me. These are my wife's books. It's her bookshelf, but it's a great backdrop. My background is very. I studied documentary filmmaking in college, so I have a very unusual background coming to this, and so I want to recommend. Now blanking on the name of this book. It's the book. This is going to be very esoteric, but I'm using this opportunity. The book about the Russian filmmaker Andrei Tarkovsky, called "Sculpting in Time," was very influential for me back in the day when I was studying film. On energy, Dan Yergin's newest book, "The New Map," is absolutely worth reading. And then on the fiction side, I'm reading Jonathan Franzen's new book right now, but I can't recommend it yet. But I really did love his book Freedom, which I thought of the books of his that I've read was really was, I think, my favorite. So those are three totally different topics.
No, those are interesting topics. I haven't read the first and the second one, or any of them, but I read Dan Yergin's The Prize and the Quest, and The New Map is on my list, and The Quest is back there underneath that Batman that's there behind me. And it's a must read. So anybody who hasn't read Dan Yergin's books, they're a must read, and you can start with The New Map or The Prize or The Quest. And I think Netflix has a documentary or a series on The Quest as well. So it's a must read for anyone trying to understand energy and global energy markets. Randy, it's been wonderful having you join us. Again, thank you so much for your time, and have a great rest of the day and week. And good luck with the Global Energy Forum. Fingers crossed that everything goes on track, and that you guys and the team pull it off this time around.
Yeah, March 28th and 29th in the UAE. So we're really looking forward to it, and looking forward to seeing you there.
Thank you. Take care. Bye-bye.
Thanks so much.